Way you go. Welcome. You're listening to The Best of Investing on Talk 910. Our show is about presenting valuable information about real estate, the financial markets, and other economic business of the day. I'm your host, Edward Brown, and I'm proud to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing mortgage investing firm. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. Now, the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina. Their only request, a $75 cleaning fee to cover those housekeeping expenses. Their website is lighthouseresortandmarina.com. You can reach them at 916-777-5511. Today's trivia theme is random trivia.
Random?
The word random. No, just in general, random trivia.
Okay.
Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And check us on television, too. You'll find us. Mark, you got some interesting articles you want to go over?
Well, hey, it's December, and it's I can't believe how fast this year's gone. It's just amazing. And yeah, I brought in the usual articles of how's housing doing right now, and but in general, what I thought maybe we would talk about is how the year has progressed for us, and how in relationship to kind of what we were anticipating or predicting a year ago. I'd love to talk a little bit about maybe where we're seeing 15 headed. Now I know before we got on the show, we talked a little about how oil and gas has gone way down.
Yeah, can you believe it? Oil, I believe, is getting close to below $50 a barrel.
Right, and so
gas prices are potentially under $2.
Probably not in
not here. Not yet.
Not yet. But even in the low threes, what a pleasure. And of course, that always trickles down to higher economic activity and consumer confidence, which are all good things. Mortgage rates are down yet again. Now, later on we'll talk about some mortgage rate projections for 2015 from some of the major, like Fannie Mae and Freddie Mac and Mortgage Bankers Association and the NAR, the National Association of Realtors. They're all predicting where they think mortgage rates are going to head, in the next year. Well, a year ago, they were thinking that we were going to be heading in the mid to high fours, maybe as high as 5% by the year end 2014. Well, here we are, year end 2014, and mortgage rates have dipped below 4% yet again.
That's amazing.
And so I know that my friends who are realtors are telling me they are having like the best December in terms of sales that they've had in years. And in fact, one of the people who works in my office went to the local Wednesday Wednesday morning broker roundup, came back and said, everyone's talking about how like right now is a great time to list your house. Now, does that not go against all conventional wisdom? Is like, well, it's December, everyone's got a holiday on the mind and shopping, and nobody
wait till spring.
Right, nobody wants to, or wait till after the Super Bowl, right?
Unless you want to wrap a present, for your wife and say, I just bought you a house.
And these realtors are saying, if you're ready to sell and you want to sell, you can sell your house really fast if you put it on the market right now. And that's just amazing. And I guess there are people who you wouldn't think would want to move during Christmas, but they actually do want to. There are a lot of reasons why people would want to buy a home before the end of the year. Sometimes it's tax purposes, but most of the time it's tax purposes. So
maybe they're starting a job somewhere.
Now I know in our office at Pacific Private Money, because we do we do non-bank financing, hard money loans. Our phones are ringing off the hook. Now, I pray every year that we're going to end the year with a great December, and we actually December for the last 3 years in a row has been the best month.
Because people want the last minute financing.
And every year, I keep wondering, is this December going to be the one that breaks the habit or breaks the pattern? And it looks like it's not. It looks like our December is going to be
another good,
another super good year. So in fact, I'm personally working on a rather large loan, for me. And most of our loans are really in the under $1 million. The vast majority of loans we do are between $200,000 and $1 million. I'm currently working on a commercial land loan right now for $1.6 million, which is a big loan for us. And
sure,
it's a nice fee to end the year. But also we're getting a lot of consumer loan requests because we're one of the few hard money lenders that actually will take consumer loan requests. We seem to be getting a lot of phone calls from people who, have to, one person called today, they still owe taxes from 2013. Now, people who filed late for 2013 would have filed their tax returns on October 15th. And right about now, if they didn't pay their taxes in full, they're getting those nasty letters from the IRS saying, okay, it's time for you to pay up that balance. And so we're getting calls from people who need to borrow money against the equity in their home for, a lot of different reasons, but usually, taxes, property taxes. So,
or to pay their California taxes before the end of the year, get a tax deduction on federal.
Now, here's a request I got this week, which is kind of interesting and noteworthy. And that we've talked a lot about how Dodd-Frank and the regulations that were enacted in 2014 really impacted people's ability to borrow against their home. So I got a call this week from a gentleman who owns a home free and clear. It's a golf course property. I don't want to get into too much detail about it because I don't really want to reveal it.
Okay.
But the house is 8,000 square feet.
Wow.
It's just he and his wife. They're both retired. He collects cars. He collects guns. He collects a lot of things, and he's had a relatively comfortable life. But he had he lost a lot of wealth when the market turned around, and as a result, he's kind of blown through the bulk of his liquid assets, and now really the only asset he has remaining is the approximately $5 million of equity in his primary residence.
Does he own it free and clear?
He owns it free and clear.
Okay.
So here's the problem, and this is where, I know that Dodd and Frank and the regulators didn't intend to take away people's options to borrow. What they really wanted to do was they wanted to identify predatory lending practices and say, we're not going to allow that to happen anymore. And among the so-called predatory lending practices, and again, this doesn't impact like investment property. You can still borrow against investment property usually pretty easily. This really all comes down to your primary residence. Dodd and Frank decided when it comes to your home, your primary residence, we're going to protect you from predatory lenders. So among the things they passed is like interest-only loans are considered predatory now, so you're not supposed to make a loan with interest-only payments. You're supposed to have P&I payments. Balloon payments are considered predatory, so now you can't make a loan. Presently, right now, we can't make a loan that has a balloon payment in under 5 years. So and a lot of us don't do 5-year loans. So, and a third is that we're not allowed to make a loan to a borrower secured by their home unless they can demonstrate the ability to make the payments, right? We call it ATR in the business meaning, which means ability to repay. And guess what? The equity in your home does not qualify as an ability to repay.
So it almost like forces the guy to sell his house.
Well, he had it on the market. He had it on the market in 2014, and it didn't sell. Now, one might argue, well, lower the price, silly.
Yeah.
Well, he didn't, and now it's off the market. He wants to put the market back. He wants to put it back on the market in spring, but he's out of cash now, and he wants to borrow just a few $100,000 against his home now, and he's got $5 million in equity. But
I guess he could do a reverse mortgage, maybe,
but other than Social Security, he has no other income. And
but I mean, he might be a candidate for a reverse mortgage, but they can get kind of expensive.
True. He might be a candidate for a reverse mortgage, but insofar as what we can do for him, it's very limited because if his Social Security income is insufficient to service the debt, because what he called, he says, I want to borrow enough so that I can just put it in the bank. I can make you the loan payments on that money with the money I borrowed.
Live off the rest of it. Sell the house.
Right, exactly. But the risk we take as a broker is I feel for the guy and I want to do the loan, but now what if he runs out of money and then he can't make the payments and he hasn't sold his house yet?
Yeah.
And
the Reg Z and the Section 32 and all these fancy things.
That's right. So it's really unfair. He's caught between a rock and a hard place, and I as the broker, I want to be a nice guy, but being a nice guy, I'm still.
You can't risk your business.
I'm the bad guy, right? Yeah. If everything doesn't go perfectly.
So what could you do for him?
Well, we don't know yet. We're still kind of working through it, and I'm still doing some research on it. And we may only be able to lend him, a fraction of the amount that he's asking for, and as long as we can do the the math.
All the
and
other rules.
all the other
yeah.
rules. So
Okay. All right. Well, but you'll have to let us know when, maybe in the next week or two, if you're able to actually get that done.
but the point, going back to what we first started talking about, it's the phones have been just really ringing. It's been busy. Hard money, believe it or not, is just in high demand because through this whole year of 2014, there's been such a shock to the system, to the banking system, to the lending system, thanks to Dodd-Frank and the new qualified mortgage rules that went into effect in January of 2014, making it much more difficult for to lend, for borrowers to borrow, and for banks to lend. And as a result of that, we're starting to see, in for all intents and purposes, unintended consequences of Dodd-Frank. And that example of a guy living in a house worth $5 million free and clear and not being able to borrow money to put food on the table is just patently ridiculous.
That is ridiculous. Okay, before we get to our first commercial break here, I want to make a quick mention here. Walking with Dinosaurs at the arena in San Jose at the SAP Center, December 25th to 28th. I love dinosaurs. I always loved them when I was a kid. So there's a spectacular event going on.
Rocks and dinosaurs.
Yeah, check them out. I guess it's at the San Jose place where the Sharks play. That'd be kind of cool. Out there, isn't that the right? The SAP Center is where do they go? SAP? The SAP Center? Or SAP? Okay, the SAP Center at San Jose, Walking with Dinosaurs. Check them out. December 25th to 28th. You can go to Ticketmaster or just check them out. Walking with Dinosaurs. Okay, here's our first commercial break trivia question against random trivia. Which band had a guitar player that went by the name of Slash? The first three callers with the correct answer win. This is from the 80s, I guess, right?
Mm-hmm.
The first three callers with the correct answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Which band had a guitar player that went by the name of Slash? If I remember correctly, he had a big hat, too.
Mm-hmm.
Okay.
You can see his face for easy.
That's right. Yeah. Stay with us because you're listening to The Best of Investing with Mark Hahn and me, Edward Brown. We'll be right back.
Was it?
Yeah. And your question, your trivia, or your question, email question. I own an individual deed of trust that the borrower wants to pay off, but I want to keep the loan as long as possible. How long do I have to sign off and getting paid? And what happens if I don't do it in a timely manner? In other words, can I keep it forever and just say, forget it, I'm not going to reconvey?
Interesting.
Oops. Oh, I forgot to put this in. Unfortunately, that doesn't affect this part here.
Save it to the stick.
B-O-I. Yeah, I don't know, for some reason yours is not picking up as much, so you have to get just a little bit closer, and I'll turn.
Yeah, it was blasting in my ear.
Is it
Both
still
you
blasting?
and me. No, now it's perfect.
Okay.
Yeah.
Turn you down to a whisper. What's that?
Oh, Mirka's making a face because she got flowers in a balloon. It turns out it's from John Citrino, who's one of her least favorite clients to work with. Because John knows he's kind of a PETA client, and so I guess that was his way of making it up.
Oh, that's sweet. I like Mirka. She's a pistol. All right, here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn of Pacific Private Money. When we cut to the first commercial break, we asked this trivia question. Which band had a guitar player that went by the name of Slash?
Guns N' Roses.
Guns N' Roses, that is correct.
Easy one.
That's an easy one. Yeah, the next one is a little harder, and the last one I think is pretty hard too. Okay.
So
now,
I teased the audience a little bit earlier
Yeah.
about predictions of mortgage rates, and just want to kind of quickly go through that. Fannie Mae thinks that mortgage rates at the end of 2015 are going to be 4.7%. Freddie Mac thinks it's 5.1, as does the Mortgage Bankers Association and the National Association of Realtors, which this surprises me because they're normally the ones that are the most optimistic. They're thinking the rates will be as high as 5.4%. So interesting how, in a year ago, I bet if I looked at the articles, 1 year ago today, that these numbers probably would have been the same. So,
yeah.
It's just interesting how it's so hard to predict which way interest rates are going. Who would have thought that the 10-year T-bill rate, which has one of the largest impacts on where mortgage rates are headed, would remain well below 3% as it has again this month in December.
Well, yeah, I remember doing a commercial loan back in 2011, and this guy was really sophisticated, and we were talking about credit default swaps and all this stuff, and he said, listen, I think interest rates are going to go up a lot, and this guy was really, really smart. And so, I thought, I actually thought they were going up also. And oops. So, I had to kind of refinance yet again. But anyway.
Yeah, so we've got great rates now. And, if you can buy a house and you want to buy a house, certainly now, as we talked about earlier, there are homes on the market right now, and homes are trading right now. It's a good time, of course, if you want to wait till after the holidays and get into it in January, February. I think the point is my prediction is I would not be one to predict mortgage rates to be 1 percentage point higher a year from now than they are now.
They won't go that high.
But it's interesting that all these national organizations essentially are saying, if you're predicting 5, you're at a full percentage point higher than today. And I just don't know that that's going to happen. I think that
I think that would hurt the economy way too much if they went that fast.
Well, and quite frankly, for as many good reports on the economy that we're hearing, there are also rather tepid. Job growth is still not where we'd like to see it, and there's just a lot of basically governors on the economy right now, things that are limiting explosive growth, and so I just would be, if I were a betting man, and I usually try not to be, but I would not, I certainly would not, I think it's almost a safe bet, because you kind of say that, not a safe bet, what am I trying to say? To predict 5% mortgage rates a year from now is an easy prediction to make. Forget about betting for a moment.
Okay.
It's an easy prediction because, if you're wrong, it's actually great news. And if you're right, it's I told you so. Right?
Yeah.
Because it's probably not likely to be 6, so it's easy to say 5, but I just don't know that I believe it. I think 15. I think it's highly likely unless something unexpected and unforeseen happens. But if oil remains low like it is, and you've got job growth really limited to tech right now, which really makes it more of an economic bubble for the California Bay Area, but still California as a whole, is not seeing huge job growth.
I thought it was interesting too. You mentioned the word governor, like to limit, something, and I think it's kind of interesting the word governor. When you were trying to I remember on an old mini bike that said, it's got a governor so that you can't go as fast as you want.
I used to have a mini bike, and it had a governor on it.
It really made me mad. Yeah, exactly.
Let me take this thing off.
It's like kind of interesting with
Call your governor.
What do they say if progress is going forward and the opposite of pro is con? What's Congress? Going backwards, yes.
That's right.
Okay, listen, before we get into email time, last week we mentioned that we were going to have a special trivia contest.
Oh, yeah.
Winner's going to get a couple nights stay at the Hyatt Regency in San Francisco. So the Hyatt Regency San Francisco boasts the city's most idyllic location, convenient to all San Francisco's attractions and transportation options. The luxury waterfront hotel is your home for the holidays and offers great rates during the season and the best rates on Sunday and Monday nights throughout the year. Those in the know will want to book Regency Club vacations. Visit sanfranciscoregency.hyatt.com for more information. I've stayed there before. It is a lovely hotel right there in San Francisco.
Absolutely.
Okay, so here's the trivia question. There is a 1 in 10 chance of this happening after you get married. What? And here's the hint. Not having sex is not one. It's not the. It's not the.
It's a clean show.
Yeah, it's a clean show. And here are the rules. You need to email Edward at bestofinvesting.com by midnight tonight the answer. And when we collect all the correct answers, we're going to randomly choose one and announce it next week. All right? And let's see, Mark. Okay, we have an email for you. It says, I own an individual deed of trust that the borrower wants to pay off, but I want to keep the loan as long as possible because I'm getting a good interest rate. How long do I have to sign off on getting paid, and what happens if I don't do it in a timely manner? So I guess what I'm gathering from this is the guy got his own individual deed of trust. He's a lender. Maybe he's getting 10%, and he doesn't want to stop that. He wants to keep getting his 10%.
Well, in California, by law, as a lender, you have 21 days to provide a payoff demand to a person that you borrowed money to and recorded against the deed of trust. So we normally try to respond rather quickly at Pacific Private Money. We service all of the loans that we originate at Pacific Private Money, and so really it's in our hands now. It's certainly happened before where I've called a lender and said, hey, we need, we're going to put a payoff demand together, and this loan's going to pay off. I need you to sign this piece of paper. And they said, well, I'm going to hold off as long as I can because I don't want the money. And when I try to say to them, that's really not a good thing to do. First of all, I can get you a new loan. It's not, it won't take that long. And it's not, I don't want to say good karma. It's just
good business
practice. It's not good business practice to string someone along like that. Oftentimes, timing is an issue. The bank is ready to close, and you don't want to be messing around with a bank loan these days. When they're ready to close, you close. You don't give them a 2-week delay and an opportunity to back out.
Technically that's not the lender's issue, but like you said, it's good business practice to be nice.
Now, I'm not an attorney, so I don't really know what the damages might be at this point if they refuse, and there would be damages. And so that's
Probably,
why I would strongly recommend a client of mine, meaning a lender client of mine, you better, let's get that document signed. Come in here. We have a notary. Come in here. Let's notarize the document. Get it back to the title company so that this borrower can go ahead and pay off your loan.
Now, I did hear a situation. Gosh, this is going back 20 years, so I don't know, how different the situation is, but a very similar situation where this individual lender said basically the same thing. He was getting 12 back then, 12% on his money.
Yeah, the loan's not due yet. You can't pay me off.
Yeah. I mean, he wasn't going quite that far, but he was saying, listen, gee, I just can't find a notary, and I can't do this, and I can't do that. I want to keep getting my 12%. The note's not due yet. And the lady borrower had the opportunity to get 9% money. And so after the 21 days, there was this, hey, what's going on? Why haven't you done it? And basically, he took like another month. Now in this case, it wasn't a situation where she was selling the property and it was, someone's going to have to sue for specific performance or something crazy like that. But basically, her attorney wrote a letter to this individual lender and said, listen, you're liable for, after the 21 days, for the difference between the 12% and the 9%. Because that's what we would have been able to get.
That wouldn't surprise me.
Yeah.
I mean, there would be damages.
Yeah.
And that's really in the realm of an attorney at that point. But again, if you're a private lender and you've been requested to pay off, you have, by law, 21 days. So I have had private lenders say, look, I've got 21 days, don't rush me. And oftentimes it takes a little bit of negotiation and finagling between there. So I've had you walk softly and carry a big stick.
Yeah, because also with your borrowers, you want to be good with them so that they come back.
Right, and when they borrow, when a borrower borrows hard money, it's usually temporary, and they're getting it because they can't get bank financing, and their ultimate goal is to either sell the property and pay off the loan or get bank financing. And when that happens, you want to accommodate them. It's good news, and it's good business practice.
And you don't have a lot of extra fees. I see some of these lenders who, it's like, this fee and that fee. And I mean, I understand a reconveyance fee, but some of these guys are just charging an arm and a leg for garbage fees.
Yeah.
Upon reconveyance.
Upon reconveyance, and you're not supposed to. It's actually posted as to how much you're supposed to charge. And I believe $175 is the maximum that you're allowed to charge. That's a combination of amounts for reconveyance and admin.
And there's a bad mojo fee too.
That's right.
All right. When we come back from the next commercial break, we're going to get into not only deal of the week, but I got some interesting tax scams here. I wish Catherine was here. I might save some of these for her. All right. So our theme was random trivia. We asked the first question. That was easy. This one's a little bit harder. What was the name of the guy who was best known as the crocodile hunter on TV? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. What was the name of the guy who was best known as the crocodile hunter on TV? Stay with us because, why? The Best of Investing will be right back.
Dang. It's been
Remember that one, huh?
since his untimely death. He's been
That's right. How did he die?
Stingray, right?
Yes. Should have left it in. But who would think if a stingray is sticking out of you that you should leave it in?
Stingray.
Yeah.
Oh, the guy who died.
Pierced his
I
heart.
thought you
Yeah.
were talking about Crocodile Dundee.
Yeah. See, I was
That
thinking that
guy.
some people are going to think
That's not a knife.
that. Yeah, lots of knife. I like that.
That's not a knife.
Lots of knife. Lots of knife.
Crikey! He used to say all the time, the crocodile hunter. Crikey.
Crikey?
Crikey. That was one of his sayings.
What's that?
It's just like, gosh, or,
Oh.
you know,
Gosh darn it. Batman.
holy moly. Crikey.
Have you recorded anything?
Not yet.
Really?
Well, I gotta
Thanks
get.
for showing up.
Jeez,
Yeah.
yeah.
Poor guy. Comes
Every-
all this way.
If it's gonna go wrong, it's everything. No, it's, yeah.
Really?
Anyway, yeah.
All right.
Okay.
Okay.
Don't let me hold up the show. Just go around.
As you were.
I just-
Okay. Welcome back to the Best of Investing. Edward Brown here, along with Mark Hunt. When we cut to the second commercial break, we asked this trivia question: what was the name of the guy who was best known as the crocodile hunter on TV?
Trying to remember his name, and I know he suffered an untimely death at the hands of a stingray.
That's right. Next time you get stung by a stingray,
Don't know.
don't pull it out.
Yeah.
Leave it in. Steve Irwin.
That's right.
That
Steve.
was his name. Okay, so I said I was going to get into a couple of these tax scams that were toward the end of the year here. So let's see here. Obviously, there's identity theft. It says here the theft of federal tax refunds climbed 400% from 2011 to 2013. And it says here cyberspace isn't always the scene of the crime. Thieves can steal your mail or rifle through your trash. Yeah, people don't want to rifle through my trash, but
So how do you get away with that? So you steal a check maybe because they didn't know it was coming, and then they find a way to cash it themselves?
yeah, I guess that's one way. I guess basically you steal the mail, and if there's a check in there, you endorse it over to yourself, I guess.
And you'd get like a check cashing place to do it, because it just seems to me that it'd be tracking purposes if you didn't do it somehow anonymously.
Yeah, you would think that the bank would require your ID and license number to put on it.
Well, regardless of how they do it, just getting it stolen from your mailbox is,
A federal offense.
well, that too.
Yeah, well, years ago, people used to write checks. I think I mentioned this once before. They used to write checks to the IRS.
Yeah.
And some lady at the IRS decided, I think I'm going to be a scammer myself.
I'm gonna change my name.
Yeah, well, no, what she did was she changed the I to an M so that it said MRS, Mrs. And then she put her last name on it and started cashing checks for, I don't know, 100,000 or something. And so now the IRS wised up and said, from now on, you write the check to U.S. Treasury. So don't change your name to U.S. Treasury, okay? All right, there's another one here. Phishing with a PH. If you get unsolicited email claiming to be from the IRS, it's a scam. They never basically ask for, through your email.
Those so-called phishing emails are so common, and because I've had the same email address for like close to 15 years now, I get tons of those. And Now, I'm fortunate enough that I know that I can like hover my mouse over the hot link where it says
Yeah.
click here, and it will say, it'll have some address that doesn't even closely resemble
Yeah.
Wells Fargo
Sure.
or the IRS or even PayPal. And you get these these emails concerning your account. Please update your this or that. And
Yeah.
I got to tell you, I should probably bring some of these in for future shows. They're getting really, really clever
Yeah.
to where it's before it used to be kind of obvious. You
Yeah.
have to really be a sucker to believe that this was
Or
really.
like Chase with 2 S's or something.
Well,
it's a little hard to tell right
yeah,
away.
well, usually there's something grammatically incorrect is the giveaway in the email, but now they're getting so sophisticated and so good that it doesn't look like it's a phishing expedition, a scam email.
Yeah.
They are.
I love the ones where it's like, I can't leave the hotel. I'm in Brussels and I can't leave the hotel. The manager won't let me leave the hotel unless I pay my bill. I need blah blah. And it's like, really? Just walk out. Write him an IOU.
Right. That's an email where it's from someone you know. That's
Theoretically,
right.
yeah.
Well, it is usually someone you know because they pull
Well,
out your database.
Yeah, that's
And
the
it's
first
not
one.
a lot of money. It's like $1,500 I need wired to me so I can get out of, and it sounds legitimate. The story sounds legitimate, but it's not. It's a
Well,
fake.
and the other way to do it then is to say, well, then you know what? Put the manager on the phone, and let me actually what's the hotel's phone number? I will call the hotel. Which hotel you're staying at. Okay, so a couple other ones here. Phone shakedowns. Criminals call up taxpayers and allege that they owe the IRS money, which must be paid quickly via wire transfer or preloaded debit card, or make it out to the so-and-so Fiji Island Fund. The caller may know the last 4 digits of the Social Security number, which is a little bit easier to get now,
Yeah.
right? Because it's just the last 4 digits, right? Or mention a phony IRS employee badge number. Yes, I'm a badge number 1423689. Yeah, how are you supposed to remember that? After the initial call, there may be a follow-up or an email from the DMV or the police. Such behavior should be reported to the Treasury Department. Let's see here. Let's get one more. And I'll just give one more, and then we'll go into deal of the week. So, bogus charities, love that one, claiming that they are gathering funds for hurricane victims or overseas relief effort. An outreach ministry, I always ask them for visual proof, their tax exempt status, et cetera, et cetera. They want your Social Security number. One of the questions that I've asked when I've gotten solicited is, how much is going to the charity?
Right.
And
What percentage?
and sometimes they're really honest and they'll say 10%. So I said, okay, so that means 90% is going to whatever company you work for. Yeah. And I
It's
said,
not unusual. Fundraising can be a very expensive business model.
to say I gave it the office.
Yes.
Okay, so we'll when Catherine gets here, let's make sure we remember to cover those cover the rest of those next week. Okay. So Mark,
Deal of the week.
give us the deal of the week.
Okay, so this is a commercial loan request, and it's a purchase, which we love. We love purchase loan requests. Why? Because usually on a purchase loan request, the borrower is coming in with real money, the down payment, and in this case, that is in fact the case. It's a request for a 70% loan with 30% down for a almost like a like new commercial R&D / industrial building. What's that? Well, that's one of those buildings where you could it's part warehouse, part office. But this is a really nice looking, well developed in Sacramento, and it's in a development where there's I believe there's 6 identical buildings. They're each like 6,000 square feet. Really nicely built, roughly 2 stories tall. Nice stucco exteriors. Nice combination office and warehouse space. And the borrower is buying this property for it's actually $675 is the price, and there's 2 identical buildings listed by others in that little complex for $750. So he's getting it's a good
It's a bargain.
it's a good deal.
By the way, how many square feet?
I don't know the exact square footage, so if you're going to try to get the price per square foot and do all that on me, that's really not the juice of the story.
Okay, go ahead.
I'm guessing, I'm remembering it's
And obviously, I know
approximately
you have
6,000 square
Yeah,
feet.
I mean, I know you have files.
I've got a file an inch thick on this,
Okay,
but
all right.
the story is, so it's good borrower coming in with 30% down to buy a property that he's actually getting a pretty darn good price on. It turns out that he's actually the lessee in the building, so he's buying it for his own use. Now he's going to be an owner-user. He's leasing a third of that 6,000 square feet, so he's leasing about 2,000 square feet. The other 4,000 square feet actually right now is vacant, but the rents that are being achieved from the existing 2,000 square feet are more than enough to cover the loan that we're going to make him, and it's going to be around a 10% loan. But here's the question. Here's what's interesting about the loan. The tenant is a marijuana dispensary. So
if you don't get paid in cash, you
so
get paid in
here's
marijuana.
the
Go ahead,
question.
Yeah.
Now, to date, I have never taken on a loan like that. I have turned them down. And the reason I have turned them down is because I was concerned about federal forfeiture laws.
Yeah, good point.
Now, the person who referred this to me is actually an investor of ours, and who has funded multiple loans. He's one of the investor side clients, the money side clients for Pacific Credit Bank. And he said, that risk really, in his opinion, isn't realistic anymore. It really doesn't. In other words, there's so many legitimate operations now in California that are legitimate marijuana dispensaries. Whether or not they get shut down or not is not the question. Is the asset at risk? In other words, what's the potential risk to the lender?
Yeah, I was going to say there wouldn't be a forfeiture of the building, I would think.
Well, that was the fear before, and that's one of the things that I think it was maybe more of a rumor than anything else, that the federal government would kind of hold that over as a potential risk. So, and what we're talking about is if you loaned, or a bank or anybody loans money to somebody on a property where quote illegal activities are going on, potentially the federal government, maybe not the state of California, but the federal government could come in and seize the asset, and maybe the lender might lose that loan. And that's
good point, because you're doing it with knowledge. It'd be one thing if you didn't know what was going on.
So interestingly enough, one of my other investors, and we've got many investors who like to invest in notes, when we made kind of we did a little email distribution, not to our entire database, but to about kind of our top 50 investors. And one in particular who actually lives in Sacramento and knows that property, right away chimed in, I'll take the whole thing.
Really?
So he's a sophisticated, been doing this for years. He's probably one of our most experienced private lenders.
Okay.
Knows how to read preliminary title reports, knows how to read the intricate documents of the note, deed of trust, and make suggestions. In fact, this is one of the guys that people in my office kind of groan whenever he's the lender, because they know that they have to redo the loan documents specifically for this guy. He likes his own custom set. But I was actually rather impressed, and that he would take it. And he firmly believes that there is virtually zero risk of federal forfeiture. So, and he himself said, even though he's not one to participate in this type of smoking activity, says that he believes it's within the next couple of years it's going to be legalized by vote in California, and that marijuana may be actually legal in California, like Colorado in the very
Well,
near
here's the
future.
thing. Let's say it was forfeiture, by the federal government. Why would the loan go away?
Well, I don't think it does.
Yeah,
You know,
let the government pay you off.
Right. But I had more than a few other investors, potential investors, call me up and say, you better check out those federal forfeiture laws. I would not do this. And Mark, you as a broker should be concerned about brokering a loan that might be exposed to a federal forfeiture action. And again, from the assuming that there is no federal forfeiture risk for a building where there's a marijuana dispensary, I'm not concerned about the marijuana dispensary getting closed down, because again, the building itself is still worth the amount they're paying for it. It's a beautiful building, and I'm not worried about the loan.
Well, it's interesting too, because they're not taking up the whole building. They only have part
They're
of the
only
building.
renting it. Right.
So
they're only renting it.
what's
They're not growing it there. That's the key thing, is they're not. It's just
I see.
distribution only. It's been there for 2 years. They have a use permit from the city of Sacramento, so
Really?
everything is on the up and up. Right.
Yeah,
So it's
that end of it, yeah.
from that end of it, it's a legitimate operation, and the owner of the dispensary has an opportunity to buy the building from the owner, and they're not going to grow.
They're not gonna grow,
They're not
yeah.
going to grow there. They're going to lease out the other 2/3 of the
I wonder if they
space.
could get a use permit for selling plutonium. That'd be okay. All right. Here is we're going to cut to our third commercial break here. Trivia question is, the Great Barrier Reef is found in what sea? The eyes go up on this one. Okay, the first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190 to answer this question. The Great Barrier Reef is found in what sea? Stay with us because the best of investing will be right back. So what happened, Mr. Quema?
I don't know. I guess when they took out all the parts and put them back in, they didn't reset stuff. Because all kinds of stuff is
They
not resetting.
screwed up your
Yeah.
thing.
They got my $400.
Well, you'll just have to
Yeah,
tell them
good
I'm
for
not
them.
happy.
Good for them.
So I like the fact that when we go downstairs, when we finally move, we're not going to ruin tiles. We'll just do
We're going to take this towel with us?
good.
See, I don't know. I don't know nothing. I know nothing.
Here, at least it,
Got some good news for the next one.
for the next segment. Be a short one. 5 minutes.
1, 2, 3, 4.
31 seconds. It's a really short one. You have about 3 minutes. 3 minutes worth of stuff.
Yep.
All right. Here we go. You're just gonna try to catch this last one, or not?
Yeah, I know.
Really?
Better happen, Captain.
All right. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, my famous co-host. When we get to the third commercial break, we ask this trivia question. The Great Barrier Reef is found in what sea?
Well, it's around Australia, right? So
It
it's
is.
Australia, the Pacific, or the Atlantic? I'm going to guess.
Those are oceans.
Oh.
This is
oh.
the
See,
trick.
all
It's
right.
not really a trick question.
All right, well, then I don't know.
Coral Sea.
Oh.
I told you this
Yeah,
one was
we
going to be
guessed that.
harder. Okay, Mark, we only have a few minutes. Finish it up for us.
So, October home prices. So, as we're getting towards the end of the year over year, October, the increase that we've been enjoying of real estate appreciation in California is slowing down, but it's still 11% year over year. And so that number is trending downward. But that 11%, and that's in the Bay Area. This is not a California number. This is a Bay Area number. But just to point out how the neighborhoods really, we have micro markets in the Bay Area. Even there's a range from 3.5% in Sonoma County year over year increase. So that's
Okay.
pretty flat.
Yeah.
All the way to, and of course this is not hard to guess, San Francisco
Of course.
year over year is 18%
Wow.
higher. So it's still, and we talked, last week we talked about how tech is really
Yeah.
driving the froth in real estate price appreciation from southern Marin all the way down to San Jose. And but interestingly enough, Santa Clara County is only up 8% year over year. So really, it's San Francisco is single-handedly brought that average up. If you pull San Francisco out of there, you're talking about a year-over-year increase in the Bay Area of under 10%. So really, it's
Healthy.
we're starting. Home prices are starting to plateau. Now, here's one last little bit of interesting nugget of information. And again, this is Bay Area. So the Bay Area median price for a home in October of 2014 was exactly $600,000. The height of the market when prices peaked in June of July of 2007 was $665. So the Bay Area median price still is not yet reached the June-July 2007 high of $665. Now, I don't have the numbers for San Francisco or some of the other Silicon Valley properties, but as we've talked about before, we're already way beyond the median prices, and so hope next week maybe I'll go bring those.
That's okay. Mention
Bring those,
before we went
numbers
on the air. We were talking about rents, about how much goes to rent percentage wise.
So I was going to save that for next week, but we've
Oh.
got a few minutes. No, let's go ahead. So 1 in 3 Americans spend more than 30% of their monthly income on housing as of 2013. That's the number that this article has. This is up 20 years ago when it was only 1 in 5. And the top 10 metro areas where the highest percentage of income is spent on rent, in San Francisco it's 40%. In Los Angeles it's 47%.
Wow.
So that's just an amazing,
Almost half your income.
almost half your income in rent. And in
And,
fact,
and that's actually is that your gross or your net pay?
no, it's gross. So, and it goes on to say, this article, the city that has the second highest level of income inequality in the country is San Francisco. And what that says is the top 5% of San Francisco's population earns $350,000 or more per year, while the bottom 20% makes about $20,000 a year.
No.
Yeah, that is some amazing income inequality. You know what the number 1 city is? Yeah, I would never
New
have
York?
guessed this.
No.
No,
Atlanta.
Atlanta, Georgia.
Ah, what did I say? Right after New York.
What's
is
going
Atlanta.
on in Atlanta, Georgia, where there would be
Maybe the
higher income inequality in the country?
maybe it has to do with the Falcons or the Braves
That's right.
or the Hawks.
But 47% in LA and 41% in San Francisco is how much people spend on their rent, and unfortunately, that number is probably not getting smaller.
No. Yeah. This is,
Probably
rich get richer, the poor get poorer. Okay.
Dang.
All right, we're gonna cut out. Here's our thoughts for the day. The number 1 rude behavior in a recent survey about cell phone etiquette. What is it?
Ringing in the restaurant.
Using your speakerphone in public. That actually would make sense.
Yeah.
You know. The other thing would be throwing your phone at somebody. Okay. And 1 in 5 people say their favorite secret spot to hide money is where?
Under their mattress.
In their shoes. I mean, that would make for quite a limp for some people. Okay, tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
Is that 9?
Yeah, that's something like that. Yeah, it's like